The markets plunged, the dollar surged, and chaos has erupted after Donald Trump's latest tariff war threats against Canada, Mexico, and China. So just on Monday when the US market opened, the stocks tanked before finally rebounding, right, after a last-minute delay. Is the worst yet to come? Hey guys, Joey here, top tier mindset trader in Philip Securities, and in this video, I'll break down exactly what has just happened and what it means for traders and investors, and more importantly, what the markets or where could the markets be headed next. And using my one good trend strategy as well, at the end of this video, we'll go ahead to analyze the markets, the key indices like the Dow Jones, the S&P 500 index, and of course the Nasdaq to see where we are and some of the key levels that you definitely want to take note of as well. So let's dive into the news right now before we dive into the markets, and I'll give you a quick market outlook. Let's go. So this is the news right over here from Channel News Asia that says stock market sink, dollar rallies on Trump tariffs. So what happens was, over the weekend on Saturday, right, Donald Trump had announced introducing tariffs on Mexico, on China, and on Canada as well, right? So the stock market opened on Monday in the US and it slumped, right? It tanked down by a fair bit, more than 1%, right? Over concerns about the global economy, after Trump threatened to launch trade wars with these three countries. And these three countries are some of the largest trading partner with the US, right? So all the three, indices fell sharply when it opened in the US, but managed to claw back ground, all right, after Trump postponed, right, the introduction of tariffs on Mexico for 1 month. So somewhere near the end, right, the market started to recover a little bit to push away from their lows because Donald Trump came out, and said that, they want to delay the tariffs on Mexico for 1 month, all right, and that's where people started to see, and that's where strength started to come back in the markets. So Trump on Saturday, right, just announced a 25% levy on imports from Canada and Mexico and 10% on Chinese goods as well. So let me first explain what is a tariff, right? What exactly is Donald Trump doing over here? Well, it's actually, tariffs are pretty much a tax on imported goods. So for example, let's say in the US, you want to buy a toy from another country, right, and this toy costs $10, right? So when the US government or when Donald Trump introduced a tariff, like for example, a $2 tariff. So when now this foreign toy that comes into US, all right, it'll be 10 plus 2, it'll be now $12. It will be more expensive. This makes the foreign toy more expensive, right? So that people would want to probably choose to buy the toys that are made in the US, in their own country. And that's exactly what Donald Trump wants to do, right? He wants to, want people to consume and buy goods in their own country. He wants factories to be set up in the US instead of Canada, instead of China, all right? And pretty much to increase, right, the production in the US. Right, and this is what it's doing to kind of like protect local businesses, but in fact it can cause what we call a slowdown in the economy, because when other countries also introduce tariffs as well, there could potentially be a trade war. All right, and as a trade war, it affects the entire global economy, and it would not be a good thing for Singapore as well. So let's take a look at the news right here. You can see investors fear that this trade war will result in a significant deterioration, right, in the global economy as well. Right, one of the asset managers are saying even the cryptocurrency sector as well has experienced a sharp sell-off, right, with Bitcoin slumping almost 5% before rebounding a little bit as well. So China, Mexico, and Canada right over here are the top 3 US trade partners and have all vowed, right, to retaliate, right, if the tariffs go into effect. Even the Europe stock exchange as well, like London, Paris, and Frankfurt, all right, the stock markets finished in the red as Trump warned over the weekend as well that the EU, the European Union, would be next in the firing line, right, and did not rule out tariffs on Britain as well. So if impose tariffs on the EU or the European countries as well, that's where there might be retaliatory action as well. And French President, right, Emmanuel Macron actually stated, right, if we are attacked in terms of trade, right, Europe as a true power will have to stand up for itself and therefore react, right? So this is something new, all right? It's still a lot of uncertainty. It really depends on what Donald Trump does over the next 2 days or next few weeks, right? Is he going to pull back on the tariff? Is he going to impose more tariffs? Other countries going to react and impose tariffs on their own as well, on goods that are coming into the EU, on goods that are coming to China, other countries doing that. If all these are happening, but then we might start to see weakness in the markets. All these are all a drag on the entire stock market. So before we look at the markets, let's take a look at some of the sectors that could be hurt, right, due to these tariffs that are imposed by Donald Trump. So for example, we have the automakers, from car brands to maker of the vehicle parts that actually exports into the US. That's where these companies will be hit as well. For example, we have like Volkswagen that owns the biggest car factory in Mexico, and it produces vehicle to be exported to the US. That's where Volkswagen could be hit as well. We saw the share price coming down as well. So the next sector that could be hit would be those in the semiconductor industry as well. For example, we have Taiwan Semiconductor that they are maker of all the chips and semiconductor equipments that they export into the US as well. Those companies could be hit as well because now it's more expensive to export or to import into the US as well. And even companies like NVIDIA, right, that they produce GPU chips, right, and even NVIDIA rely on the production of chips that are outsourced from factories overseas, right? In order to build its GPU, it needs all the little chips to build it, right? So all these parts are all from factories in Mexico, even in China, all right? So that's where NVIDIA could be hit as well in terms of rising costs, right, from those newly imported, products, or due to rising costs for many of those parts that they bring in, right, to build their GPU chips. So many of those consumer goods that are produced overseas, that are imported into the US, right, could see a price increase as well, all right, and that's where many of those in the consumer sector could be affected as well. All right, so let's take a look at the markets right now to see how this tariff announcement has actually affected the Dow Jones, the S&P 500 index, and even the Nasdaq. So this is the Dow Jones right over here, right? You see that we approach this very key 45,000 level right over here. Then we just going to draw this rigged resistance line. And that was where we were, somewhere in December. We sold off and we approached this level over the past 1 week, right? Very firm resistance. That's where we expected selling to happen. And yes, you can see, right, over the past 2 days, a very red bearish bar came out right over here as we attempted to break above the 45,000 level. So we couldn't, break above it, right? Sellers came back, push it down, and on Monday, right, we saw a bit of a tank down, and we're now back towards the 44,000 support level. So I think, we are seeing a bit of weakness in the short term, a bit of selling, due to this resistance as well, and of course due to the tariff news as well, all right? But overall, my take is that we could see perhaps a little bit of weakness in the short term. You might just see a bit of a pullback like what we have seen in December. But overall, if you ask me, I would say that the longer term trend still looks pretty okay for the Dow Jones, right? Assuming that this whole entire trade war does not get out of hand, all right, and assuming that Donald Trump does not impose more tariffs on other countries as well, even in the EU as well, all right, and escalate the whole situation, right? So far what we're seeing is that the market is reacting due to this news over the weekend, all right, and yeah, we could see maybe a bit of weakness over the next 1 to 2 days, maybe next 1 or 2 weeks, but if you were to fall some of those good support levels, right, that's where some bargain hunting can come back again. Like for example, right, we could have this support right over here and around the 42,000. You see right over here, that was where we rebounded once in November, even in December, January as well, rebounded. I think 42,000 would be a really good support level, would be able to trade down, all right, or retrace back down to this support level. All these could be good buying opportunities, right, to think about getting back in again for the entire market, because the longer term trend, you can see it is still up. In fact, since last year, look at the 100 days moving average in the red line and the blue line, the 200 days moving average. Both of these two lines are pointing up. The red is above the blue, right? So pretty strong longer term uptrend. Of course, in the short term, we can see a bit of weakness like we have seen in April last year, because it's a bit of sell down, the bearish signal sell down. So whenever we get a bearish signal, well, you want to be careful that, for example, we got a bearish signal in December, we sold off a little bit, right? And a new bullish signal came out and off we went. So yeah, we'll see, right, whether a new bearish signal comes out over the next 1 or 2 weeks. All right, as I say, right, if we do see more tariffs being introduced, that's where we may even break down some of the key support levels and we may have a bearish signal. But anything near 42,000, you can stabilize there. If we see like maybe the 20 days moving average line, so this green line represents the short-term trend. So if it's like more moving down, then not so good, right? Going down, 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 not so good. If it starts to point up, that's where we're starting to see a bit of a strength in this short-term trend. So right now it's still slightly pointing up, so I think it's still okay, but if this green line starts to point down with like a bearish signal coming out, well, then we may, right, start to see weakness in the market. More selling pressure can come back, I would say, over the next 2 weeks. So this is what I'm watching, right? This is what I'm watching, right? Let's hope that this 42,000 will hold, right? This 42,000 has been holding for about 3 months. So if it hold over 42,000, I think that could be grounds, of a very good attractive level, right? Whereby some bargain hunting can come back again. Okay, let's take a look at the next one. That would be the S&P 500 index, right? So essentially, right, I have this indicator whereby, with a click of a button, we can turn on what we call the bullish or bearish signals in seconds. Look at this, right? This is kind of like a blank chart, right, for the entire market. And let me just turn it on, pop, right? And that's where we have bullish and even bearish signals coming out. So you can see the S&P 500 has been in a pretty strong longer-term uptrend, I would say, since 2023, right? Right over here, about 2 years back, 100 days, the red line, and the 200 days moving average, the blue line. You see both of them were pointing up since 2023. Right now, they are still pointing up, of course, right? As I mentioned, right, in the longer term, we could be in an uptrend, but it doesn't mean that in the short term we cannot sell down. We can sell down for like a month or two, or maybe up to 3 months, like you see over here, right? This was in August 2023. Got a bearish signal, down we went, right? A bearish signal 1 month, a bearish signal 2 weeks down, all right? So let's take a look at where we are right now and what it says on the chart, right? Based on my 1GT, the one good trend strategy, based on the 1GT Pro indicator as well. So you can see, right, we had a couple of bullish signals coming out just 2 weeks back in January. All right, we're actually starting to see some strength. All right, look at the 20 days moving average line. You can see, right, this green line, the 20 days moving average line, we got a bearish signal somewhere in December. The green line started to point down. So that was where we saw selling, right, in December, when there were talks about slowing down the pace of rate cuts, right? So that's where the markets cooled off a little bit. There's some sell down in many of those technology stocks as well. All right, and we got a bearish signal. But over the past week, right, that was before this Donald Trump news on the tariffs, or the weekend, right? We actually saw some sign of trend, right, with the 20 days moving average line starting to point up, right? And we got a bullish signal actually attempted to break this very key level. I think this level will be key. I think that will be the 6,100 level. You see, right, we're actually attempting to break the 6,100, but with these news coming out, you can see we kind of like push and respect the same 6,100 level again. We're like kind of pushing away from it again, right? So what would be the support level for the entire market? Well, I would say that the support level would be somewhere around the 5,008. So 5,008 would be a pretty good support level. We've been holding a little bit since November. Right, since November, we're holding a little bit. You can see back here, rebounded. All right, 5,009, maybe a little bit of a support, but I think 5,008 will be where the longer term moving averages are as well. So I think the S&P 500 index that pretty much tracks the top 500 companies in the US, right? It looks pretty okay. All right, we are seeing some form of selling near the 6,100 resistance. If it pulls back down to maybe 5,800 or so, right? Well, that could be a good opportunity as well, right? And that's where hopefully, right, we could see some bargain hunting coming out as well, right, near the 5,800. Okay, let's move on to the Nasdaq, right, the index that pretty much tracks the top technology companies in the US, all right. And before I talk about the Nasdaq, what happens is that if you want to find out a little bit more in terms of how within a few seconds you can get a quick opinion on any stocks, any asset classes, whether is it the US stock, whether is it like Nvidia or Tesla or any stocks, or maybe even crypto as well. I think one of those free webinar, right? The link is right below the video. Click on it, register for this free webinar whereby I share with you guys a little bit more on the entire one good trend strategy and how with this one good trend Pro indicator, it allows us to get an opinion in seconds whether to buy or to sell, right? And how do we actually filter out the top 1% of stocks, right, before we are guided on where to get in and get out, right? So attend one of those free webinar to find out a little bit more. So this indicator works on not just stocks, but even the markets, like what we're doing right now. So this is in Nasdaq. It works for the Nasdaq as well, for any stocks as well. So let's take a look at how it looks for the Nasdaq Composite Index. So you can see longer term trend for Nasdaq, it looks pretty strong just by looking at the RICS. And the blue line, right? So both the red and blue line are pointing up. So I think longer term trend is still up, all right? In the short term, can we see weakness? Yes, we can, right? So you can see, right, somewhere around June as well, right? We saw the 20 days moving average line turning down. That's where we are seeing weakness. Of course, we got a bearish signal as well. Same thing over here in April is sold down, right? Right over here, look at it, right? So there's a bit of sell down, a couple of bearish signals coming in 2023 October, right? So when it sold off, we got bullish signals coming in, and off we went, all right? I think the most recent bullish signal was in September 2024, all right? Got a bullish signal, pump, off we went. So let's take a look at what has happened over the past 1 month. So even before this tariffs was announced over the weekend on Saturday, right, we actually have a bearish signal coming out right over here, you can see the 20 days moving average green line that was like scoping up since September for about 3 to 4 months, right? This green line started to actually flatten out. Maybe it's quite now a little bit. Right now, the 20 days moving average line, you see, right? It has started to move sideways. So when it moves sideways, it means that we have found a little bit of a resistance. When we're going to draw this resistance level, because now with a 20 days moving average that moves sideways, it means we are back in a consolidation. So once there's a consolidation, it means that we have found a little bit of a resistance and even a horizontal support have came out. So I've drawn this resistance level right over here. I think that will be somewhere around the 20,200 level. I think over the past 1 month plus, we've seen some selling per year, came down, right? 2 weeks back, came down as well, right? So I think 20,200 would be a very key resistance to watch. What about the support? Well, maybe there's somewhere over here at about the 18,000. Let me just see, right? Somewhere around the 18,800 for the Nasdaq composite. So that was originally the resistance we touched at pullback in July last year. A bit of a resistance in October, basically when we broke above it somewhere in November. Good, right? Went up, retested it, and off we went. You see, that was where we rebounded again another time in January. So I think 18,800 will be a very good support level for the Nasdaq. So we got a bearish signal, right? And the 20 days moving average line has turned from up to a bit of a sideways. So I would say that not really that negative. I mean, we're just kept below the 20,200 resistance. We are pretty much moving sideways. It's just moving up and down from 18,800 to 20,200. So that is pretty much a sideways consolidation phase. So I think it still looks pretty good because the uptrend in the longer term is still intact. If we were to get a new bullish signal, right, and this green 20 days moving average line were to start to reverse back up, right, with a new bullish signal, especially if we break the 20,200, I think that could be where it can spark off more upside momentum and to see targets being raised even higher, maybe all the way to that 21 or maybe even to that 22,000 level. Alright guys, so there we have it. This is pretty much what has happened to the markets and why we are selling down over the past 1 to 2 days due to Donald Trump's introducing tariffs on Mexico, on China, and even on Canada. Right? So let's see how it plays out overall. I think the market still looks pretty bullish in the longer term. In the short term, we may see some selling depending on how the situation unfolds. But overall, let's see if there could be some good bargains coming out as well due to this news, due to this development in terms of what Donald Trump is announcing as well over the next few days. Alright, so I hope you like this video, and if you want to find a little bit more in terms of the entire one good trend strategy and how we filter out the top 1% of stocks in seconds and then know where to buy and sell them, attend one of those free webinars that we're still running. The link is right below the video. Click on it, register for it, and I can't wait to share with you guys a little bit more as to how do you actually ride trends and profit massively, right, by taking less than 5 to 10 trades a month, by potentially making gains of 5%, 10%, maybe 15%, all right, and riding those huge potential stocks, right? So Joey here, thank you so much for watching. I'll see you in the next video. Take care.